Now, Dan Harverd is head of research at Deutsche Bank in Israel. He joins us live now from the Tel Aviv Stock Exchange. And so, Dan, Israeli banks have relatively low exposure to the European debt crisis, haven't they? So why are we seeing such large declines?
Well, I think there are two main reasons for the declines. What we saw during the summer were social protests, and in the wake of that, some government action, which is still in the process, which could well lead to reforms in the capital markets as well as the economy generally, and obviously concerns that public pressure will lead to perhaps action against the banks. They're an easy area to hit. And then the second reason is that with the weakness in the capital markets, it became pretty clear that we would see weak results from the banks in the third quarter, and that indeed is what happened. We saw 3 banks issue profit warnings ahead of Q3 results.
And I mean, so tell me, another reason behind these declines in third quarter profit was more money being set aside for bad loans. Do you expect that situation to get better or worse in the next 12 months?
Well, actually, it was really a one-off during the quarter. The banks set aside provisions for declines in the value of collateral on leveraged loans, where the collateral was equities. So from that perspective, as long as capital markets are stable, I wouldn't expect to see that kind of provision going forward. Having said that, if the economy weakens, then it is logical that we'll see higher general provisions from the bank.
We were just looking at some of those share prices there year to date. The largest lenders, Hapolim and Lumi, have lost 30% and 40% respectively this year. If the underlying earnings are not as bad as some of these profit warnings suggest, seems to be what you're suggesting, why aren't, are we seeing evidence of investors wanting to rush in then?
Well, what's interesting is that since the results were actually announced and people had a chance to dig through the numbers and come to that conclusion that underlying earnings were in that bag, we have actually seen the banks rally. Big banks are up by over 3% today. And it's pretty unusual, I'd say, over the period of the last few years to see the banks trade below book value, especially when I think the question marks surrounding book value are not as great as you see in many European banks today. As you mentioned, low exposure to problematic bonds.